So you are in investment mode in a sense. I mean, average revenue per user up 30%, but at the same time, gross margins coming down as you move into some new areas, including video ads. You've got this pending acquisition of DataZoo. Explain to investors exactly what you're doing here, the impact on margins, but where you hope it takes you over the longer term.
Sure. So, we had a great quarter. Our results exceeded our expectations and our outlook. We advertising impressions more than doubled year over year on the platform, which is a big area of growth for us. And there's a lot of new content services launching. You've heard of things like Disney Plus and Apple TV Plus, and those are all great accelerators for our business. We're an essential partner for those types of companies. We set a goal of running the company this year at roughly EBITDA break even. We've exceeded that. We're a slight EBITDA positive this year, and that's because we are putting most of our increase in gross profit back into the business. And you can see that because it's such a big opportunity. I mean, most of the world still doesn't stream, even though it's getting very popular. We're the U.S.'s leading streaming platform, so it's a big opportunity. So you're seeing things like us launching Kids and Family on the Roku channel, the new Roku smart soundbars, which is a new way for us to acquire active customers. There's a lot of products that we're investing in that are going to pay off in the future.
You mentioned Disney and Apple, both of them launching streaming services, and you used a metaphor on the call. A lot of people might not realize you're kind of like a retailer in a sense. You've got people who are coming through Roku, and Disney and Apple can pay to get in front of those people and say, hey, subscribe to our service. So you have not only revenue share when people sign up through Roku, but potential marketing dollars that you can make off of putting those users in line to get onto those services. Tell me, how do you expect that based on what you've seen previously to trend? So when they launch, of course, you expect them to spend to get users. After the holiday season, maybe when people have bought new devices, do you expect to see another surge in spending on these companies trying to get subscribers?
Yeah, I think what we're going to see, what's happening is you have the technology companies creating new streaming services, and you have the incumbents, realizing, wow, most of my users are moving to streaming, so I need to follow them. And so there's a lot of new streaming services launching, and we're an essential partner for those services. We're a great way to launch those services. That's our business. Our business basically is connecting end users that are watching television with the streaming services that want to reach those users. And so, yes, we get paid when we help sign up customers. So when our partners win, we win. We help them sign up customers, and we get a % of revenue for that. But then also, we've built a purpose-built platform for watching streaming television, and we've built, among other things, into that platform a lot of features to merchandise services and help these companies acquire subscribers. And so we do get paid for that. So that's part of our business model, and it's a good business.
Okay, and I want to ask about DataZoo, and I know that this hasn't closed yet, so you've been a little oblique in how you're talking about it, but to what degree is this going to be relevant beyond just Roku? Are you going to continue to pursue their strategy of doing TV buying overall, OTT across all different platforms, even outside of Roku? Are you aiming to be the go-to spot for a video ad programmatic?
Well, DataZoo is an omni-channel DSP, but the main reason we bought DataZoo, or are buying DataZoo, and our focus there is on expanding our platform. And we have a great world-class leading streaming ad platform. It's built into our TV first experience. And, but we see, and most TV ads, even on streaming today, are sold direct, meaning, our direct sales team goes out and talks to agencies and marketers, and they buy ads. But the world obviously is shifting to, self-serve tools, automated buying, and so for us, adding a DSP to our platform is a way is part of our technology roadmap. Moving that forward, getting ready for the day when all TV eventually ads will be purchased programmatically, and so we're just systematically building out our platform, getting ready for that day. So for us, the DataZoo acquisition really is about a great team and expanding our ad platform, to be more future ready.
Anthony, big debate happening right now within digital advertising around political advertising, whether it's Twitter, whether it's Facebook, whether today reports about Google reviewing some of its policies. As you get more involved, whether it's with DataZoo or otherwise, into advertising, how are you thinking about that at Roku?
Yeah, so advertising is our biggest gross profit driver. It's, you think about all television moving to advertising. There was a report that about 29% of viewing is now streaming, but only about 3% of TV ads have moved to streaming, and that's not because they're not going to, it's because there's always a lag. And so the TV advertising is going to move to streaming in a big way. It's a big driver of our business. Like I said, ad impressions more than doubled, in the quarter year over year. So we're a great platform for advertising. We have a lot of tools for advertisers. We support all different ad categories. We also do sell to politicians who are buying political ads, just like TV companies generally do. I mean, it's actually a pretty small part of our business.
Finally, Anthony, we've been asking a lot of companies that are not yet profitable about the changing environment and the market's tolerance for losses, and whether or not they're making changes at the margin to either accelerate profitability at the expense of long-term growth, even tactically. Have you done anything like that?
Well, we made the decision for this year, at the beginning of the year, to run Roku at EBITDA break-even roughly. We're actually slightly positive on an EBITDA basis. And we think that is the right balance between not having a negative cash flow, but also investing our incremental gross profits back into the opportunity, because it's such a huge opportunity for us. At least we're focused on maintaining our lead and growing our lead in the streaming business as the world transitions to streaming. So we don't want to lose money, but we also think it's wise to keep investing back in the business.